Mental Game of Trading by Jared Tendler, audiobook summary in English. Welcome to Power Books, the channel where we break down the most powerful books on trading, investing, mindset, personal development, business, and success to help you gain the mental edge and master the markets. In today's video, we're diving into The Mental Game of Trading by Jared Tendler, a groundbreaking guide that goes beyond strategies and indicators to help you fix the real reason most traders fail: their emotions and mindset. If you've ever struggled with fear, FOMO, tilt, hesitation, or inconsistency, this book will show you exactly how to break those mental patterns and trade at your highest level. Stay tuned, this one could be a game changer. Chapter 1: A System to Fix Mental Game Problems. The foundation for mastering your trading psychology. In this opening chapter, Jared Tendler introduces his core framework for dealing with the psychological challenges traders face, what he calls the mental game system. His goal is to help traders not just cope with issues like fear, greed, hesitation, or tilt, but to correct them at the root level for lasting performance improvement. Key concepts. 1. The real problem isn't emotions, it's what's behind them. Emotions like fear or frustration aren't the actual problem, they're symptoms. Beneath them are underlying flaws in your beliefs, perspectives, or emotional reactions to uncertainty, losses, or pressure. Tendler's system teaches traders to trace these emotional reactions back to their source and resolve them, not just suppress or manage them. 2. You already have a system, but it might be broken. Many traders rely on gut instinct, discipline, or mental tricks to stay focused or calm, but these strategies are often inconsistent. Tendler presents his 5-step mental game system as a reliable method to 1. Recognize patterns of errors. 2. Understand the emotions and thoughts behind them. 3. Identify the real cause. 4. Correct the flaw. 5. Build a stronger, more stable mindset over time. 3. The role of emotions in trading. Emotions become problematic when they interfere with your decision-making process. For example, fear may cause hesitation or early exits. Greed may push you to overtrade. Overconfidence may cause risk mismanagement. Tendler emphasizes the importance of developing emotional resilience, not removing emotions, but working with them constructively. 4. The trading environment amplifies psychological weaknesses. The market is random, uncertain, and emotionally intense, perfect for triggering mental game problems. Unlike other professions, traders don't get consistent feedback or guaranteed results, which makes it harder to stay mentally sharp. That's why a structured system is essential. It gives traders a way to track their mindset, adapt, and evolve. 5. You can't willpower your way to discipline. Many traders think mental strength is about forcing yourself to stay calm or follow your rules. But Tendler argues that discipline is a skill, not just a mindset. The mental game system helps you build that skill by uncovering the thoughts, emotions, and beliefs that sabotage discipline and replacing them with better mental habits. Key takeaways: you need a structured system to truly fix recurring psychological issues in trading. Emotions aren't the enemy, they are clues to deeper problems. Tendler's mental game system helps traders move from reactive to proactive, from emotional chaos to mental clarity. This chapter lays the groundwork for identifying why you make trading mistakes and how to correct them long-term. Chapter 2: Map your pattern. The first step to solving your mental game issues is identifying them clearly. In this chapter, Jared Tendler explains that you can't fix what you can't see. To begin correcting mental game problems like fear, tilt, or hesitation, you need to map the pattern, the sequence of emotions, thoughts, and behaviors that occur before, during, and after the problem shows up. Key concepts. 1. Patterns repeat for a reason. Emotional and mental breakdowns in trading are not random. They follow a predictable pattern, which means they can be understood, tracked, and eventually corrected. Mapping your pattern helps you become more self-aware of your mental state and reactions in real time. 2. The 4 components of a mental game pattern. To effectively map your issue, Tendler encourages you to journal or observe these 4 key components. 1. Thoughts. What are you thinking before and during the moment? E.g., I can't miss this move, or this has to be the one. 2 emotions, what feelings arise? E.g., fear, anxiety, excitement, anger, frustration. 3 physical sensations, what happens in your body? E.g., tension in the chest, sweating, racing heart. 4 behaviors, what do you actually do? E.g., overtrading, closing early, revenge trading. By breaking down these components, you begin to create a mental profile of what your issue looks like a footprint you can recognize and track. 3 real examples of mapped patterns. Tendler provides several examples of trading errors and how they manifest, such as fear of losing causing hesitation to enter a trade, overconfidence after a winning streak leading to overleveraged trades, tilt after a bad trade causing revenge trading. Each example follows a specific thought, emotion, behavior loop, showing the importance of identifying your personal pattern. 4. The power of awareness. Once you see the full cycle of your mental error, you can start interrupting it. For example, recognizing that anxiety comes before a fear-based exit gives you a chance to pause and respond more rationally. Awareness is the first tool to break the cycle. 5. Start your mental game journal. Tendler strongly recommends keeping a mental game journal. After each trading session, write down what triggered your emotions, what thoughts and feelings came up, what did you do or not do, what would you do differently next time. This habit allows you to build clarity and slowly start changing your responses. Key takeaways. Mental and emotional mistakes follow a predictable pattern. Mapping them gives you control. You must identify thoughts, emotions, physical signs, and behaviors tied to each mental issue. Journaling your patterns builds self-awareness, helping you spot trouble before it affects your trades. Awareness is the first step toward transformation. Chapter 3. Find the root of your problem. Fix the cause, not the symptoms. After mapping your emotional and behavioral patterns, the next step is to dig deeper and uncover what's causing them. In this chapter, Jared Tendler emphasizes that if you only address the surface-level issue, like fear, hesitation, or revenge trading, you'll keep repeating the same mistakes. You need to fix the root cause. Key concepts. 1. Symptoms versus root causes. Most traders make the mistake of managing symptoms, trying to calm nerves with breathing exercises, forcing discipline through willpower, avoiding losses by overanalyzing setups. But without addressing the core beliefs and assumptions driving those reactions, the problems resurface, especially under pressure. 2. Common root causes. Tendler identifies several core mental flaws that often lie at the root of repeated trading problems. Perfectionism, believing you should never make mistakes. Entitlement, thinking the market owes you a win. Overconfidence or insecurity, tied to ego or needing to prove something. Fear of failure, often based on past traumas or performance-based self-worth. Unrealistic expectations, like expecting the market to behave rationally. These flawed beliefs create distorted thinking, emotional volatility, and poor decision-making under pressure. 3. How to uncover the root. Use the pattern from Chapter 2 and ask why multiple times. Why did I exit early? Because I felt anxious. Why did I feel anxious? Because I didn't want to lose. Why didn't I want to lose? Because I believe a loss means I'm failing. Losing means I'm not good enough. That's the kind of insight that creates real transformation. 4. Look at your history. Often the root cause goes beyond trading. Childhood experiences, previous careers, relationships with failure, risk, or pressure. By connecting trading issues with past life experiences or deeper beliefs, you begin to understand why certain situations trigger you emotionally. 5. Signs you've found the root. The insight resonates deeply. It feels like a truth you've been ignoring. You feel some emotional release or clarity. You recognize how this belief has affected more than just your trading. Key takeaways. Don't treat trading mistakes like isolated problems. They're symptoms of deeper mental patterns. Find the flawed belief or emotional wound driving the reaction. Use journaling and self-inquiry, especially asking why repeatedly, to dig down. True progress begins when you fix the cause, not just the effect. Chapter 4, Greed. When profits blind you and destroy your edge. In this chapter, Jared Tendler breaks down one of the most dangerous and misunderstood emotions in trading, greed. While many traders view greed as simply wanting more, Tendler reveals that it's much deeper, and it often masks emotional flaws like insecurity, fear, or the need to prove oneself. Key concepts. 1. Greed isn't just wanting more. Wanting to make money is natural and necessary in trading. Greed becomes a problem when you overtrade to chase profits. You hold on to winners too long, trying to milk the move. You increase position size recklessly after a few wins. You deviate from your plan for just one more trade. These behaviors lead to emotional instability and big losses. To the root causes behind greed. Greed is often a symptom of deeper mental game issues. Fear of missing out, FOMO. Chasing every opportunity out of fear of being left behind. Need to win to feel good enough. Using profits to boost self-esteem. Impatience, wanting success too fast or comparing your progress to others. Entitlement, feeling like the market owes you after a losing streak. Tendler stresses that fixing greed means finding what's driving it emotionally. 3. How greed shows up in trading. You enter trades that don't meet your setup. You ignore your rules when a trade is going well. You convince yourself to stay in a trade even as reversal signals show up. You feel anxious or irritated when the market moves without you. These reactions distort your thinking and destroy consistency. 4. Counteracting greed with logic and structure. Develop a clear trading plan with predefined targets, entry-exit points, and risk parameters. Use checklists to stay grounded and objective during emotional surges. Set rules to scale out of positions or take partial profits to reduce temptation. Tendler also recommends journaling greedy impulses to recognize when and why they arise. 5. Building emotional control. Use your mental game profile built in earlier chapters to track the pattern of greed. Identify what thoughts and feelings come up right before greed-driven actions. Practice self-correction in real time by pausing and reviewing your plan before acting. Over time, you develop emotional muscle memory, a new mental habit that replaces greed with discipline. Key takeaways. Greed is often a mask for deeper issues like FOMO, insecurity, or emotional neediness. It leads to poor decisions, inconsistency, and large drawdowns. Combating greed requires structure, awareness, and emotional rewiring. With discipline, you can transform greed into confidence, patience, and clarity. Chapter 5, Fear. The invisible force that makes you hesitate, exit early, or never pull the trigger. Fear is one of the most common and damaging emotions in trading. In this chapter, Jared Tendler explains how fear silently undermines your edge, not by loud emotional outbursts, but through hesitation, self-doubt, and premature exits. Key concepts. 1. Fear sabotages performance. Fear causes traders to hesitate on a valid setup, exit winning trades too early, avoid taking trades after a loss, second-guess every move. These behaviors stem from emotional pain avoidance, a deep desire to avoid the discomfort of being wrong, losing money, or feeling inadequate. 2. Types of trading fears. Tendler breaks down several common trading-related fears. Fear of losing, rooted in self-worth or money attachment. Fear of missing out, FOMO, leads to chasing bad trades. Fear of making mistakes, often tied to perfectionism. Fear of ruin, anxiety over blowing your account or failing long-term. Fear of letting others down, pressure from external expectations, e.g., spouse, friends, or investors. Each type of fear manifests in predictable patterns, and you must identify your specific type to fix it. 3. The real problem, flawed beliefs. Fear doesn't come from the trade, it comes from your beliefs about the trade. For example, believing that losing money equals personal failure. Thinking one bad trade could ruin your future. Needing to always be right to feel worthy. To eliminate fear, you must change the belief behind the emotion. 4. How to fix trading fear. Tendler outlines a multi-step process. 1. Map your pattern. As in previous chapters, log thoughts, emotions, and actions before, during the fear moment. 2. Find the root cause. Ask why repeatedly until you uncover the core belief. 3. Inject logic. Prepare rational counter-statements to challenge the fear. Example: 1 loss doesn't define my skill, it's part of the game. 4. Real-time corrections. When fear arises, pause, apply logic, and make a deliberate decision. 5. Repetition. Emotional conditioning takes time. The more you apply the correction, the more automatic it becomes. 5. Fear can be useful. Tendler notes that not all fear is bad. Sometimes fear can alert you to real risks you're ignoring, help you tighten up your risk management, reveal areas of your plan that lack clarity. The key is learning to differentiate irrational fear from useful caution. Fear in trading often stems from flawed personal beliefs, not the market. Common fears include loss, missing out, failure, and making mistakes. You must identify the fear, trace it to its root, and apply logic to rewire your reactions. When addressed correctly, fear becomes a source of awareness and growth. Chapter 6. Tilt. When emotions hijack your mind and your trading. Tilt is a term borrowed from poker, describing a mental state where your emotions take over and you start making irrational, impulsive, and destructive decisions. In trading, tilt is what causes you to revenge trade, overtrade, increase your size out of frustration, or ignore your trading plan completely. Key concepts. 1. What is tilt in trading? Tilt is not just a bad mood. It's an emotional hijack. Your rational brain shuts down and your emotional impulses take over. Common signs of tilt. You try to get back at the market after a loss. You over-leverage after getting stopped out. You ignore your risk rules or abandon your system. You justify irrational decisions emotionally. I deserve to win this one. 2 types of tilt. Tendler outlines several flavors of tilt. Anger tilt, triggered by losses, slippage, missed entries, etc. Injustice tilt, feeling like the market is unfair or out to get you. Hate losing tilt, when losing feels unbearable, even if the trade was correct. Ego tilt, needing to prove you're right, not accepting you're wrong. Entitlement tilt, feeling you deserve to win, especially after effort or time spent. Each one is rooted in flawed emotional patterns or beliefs. What causes tilt? Tilt happens when emotional buildup exceeds your ability to control it. That buildup comes from unresolved emotional patterns, unrealistic expectations, suppressed frustration from previous trades or life situations, a lack of emotional resilience or mental capital. 4. How to fix tilt. Just like with fear and greed, the solution is systematic mental work. 1. Recognize early signs. Notice tension, frustration, aggressive thoughts, or impulsive urges. Journaling helps you spot recurring triggers and escalation patterns. 2. Inject logic before it spirals. Use reminders or affirmations to ground yourself in reality. Example: 1 trade does not define me, I follow my plan. 3. Take breaks. When tilt starts to rise, step away from the screen. Even a 10-minute walk or a reset can prevent massive emotional damage. 4. Rewire flawed beliefs. Challenge beliefs like I must win or the market is unfair. Replace them with rational truths. Losses are part of the game. 5. Build emotional endurance. Like working out, emotional control gets stronger with practice. Journaling, reflection, and structured mental practice help prevent future tilts. Why tilt is dangerous? Tilt destroys consistency. 1 bad tilt episode can wipe out weeks or months of progress. It damages your confidence and increases hesitation later. Tendler says, if you don't control tilt, tilt will control you. Key takeaways. Tilt is a state where emotion overrides logic, leading to reckless trading. It often stems from unresolved anger, ego, perfectionism, or entitlement. Early detection and structured emotional strategies are key to stopping tilt. Preventing tilt is crucial for long-term success and psychological resilience. Chapter 7. Confidence. The balance between self-belief and emotional stability in trading. Confidence is a double-edged sword in trading. Too little, and you hesitate, overanalyze, or avoid good trades. Too much, and you become reckless, overconfident, and break your rules. In this chapter, Jared Tendler shows how to build stable, grounded confidence that holds up under pressure. Key concepts. 1. Types of confidence. Tendler identifies 2 types. True confidence, built on facts, skill, and repeated performance. It's steady and doesn't waver after losses or mistakes. Illusory confidence, based on recent wins, emotions, or ego. It's fragile and easily shattered by a losing streak or unexpected outcome. If your confidence spikes after a few wins and crashes after a loss, you're relying on the wrong kind. 2. What destroys confidence in traders? A few bad trades or one big loss. Over-focusing on results instead of process. Comparing yourself to others. Doubting your system or edge after drawdowns. Negative self-talk and perfectionism. These confidence killers often stem from deeper beliefs like, I'm not good enough, or I can't handle failure. 3. Signs of low or shaky confidence. Hesitation to enter valid setups. Need for constant validation or reassurance. Fear of being wrong. Quick emotional reactions to small setbacks. Jumping from system to system. 4. How to build real confidence. Confidence must be earned and stabilized. Tendler's process involves 1. Track and validate your skills. Review your trades objectively to reinforce that your edge works. Focus on executing well rather than just making money. 2. Inject logic to rewire doubts. Example, a loss doesn't mean I suck. It means this trade didn't work out. Challenge negative beliefs with evidence from your trading journal. 3. Set performance-based goals. Measure success by process consistency, not just profits. 4. Address the root beliefs. Find what your lack of confidence is really about. Is it fear of failure, fear of looking stupid, perfectionism? 5. Create a confidence routine. Pre-market routines, affirmations, and journaling reinforce mental strength. Visualization and reflection help lock in progress. 5. The goal, stable, resilient confidence. True confidence allows you to keep trading through drawdowns. Stick to your plan even when it feels hard. Stay grounded in the face of wins or losses. Bounce back quickly from mistakes. It's not about being perfect, it's about being mentally prepared and emotionally balanced. Key takeaways. Confidence in trading must be based on skill, preparation, and process, not luck or emotion. Identify and eliminate faulty beliefs that lead to overconfidence or self-doubt. Journaling, logic, and repetition are key tools to build stable confidence. When real confidence is in place, performance becomes consistent, resilient, and focused. Chapter 8. Discipline. The backbone of consistent trading performance. Discipline is what keeps you grounded, especially when emotions are pulling you in the wrong direction. In trading, discipline means following your plan, sticking to your risk rules, and executing your edge with consistency, regardless of how you feel. In this chapter, Tendler breaks down what discipline really is, why it breaks down, and how to strengthen it. Key concepts. 1. What is discipline in trading? Discipline is the ability to act according to your plan, even when tempted to deviate. It's what allows you to cut losses instead of hoping they turn around. Wait for setups instead of forcing trades. Stick to size and risk rules. Follow your edge consistently. It's not just about willpower, it's about emotional control, clarity, and mental conditioning. 2. Why do traders lose discipline? Tendler explains that losing discipline isn't just being lazy, it's usually a symptom of deeper issues. Emotional interference, fear, greed, tilt, frustration, lack of clarity, unclear plans or conflicting goals, overconfidence or revenge, feeling invincible or needing to get it back. Poor preparation, trading without a proper plan or routine. Often, traders think they have a discipline problem, when in reality, it's a symptom of emotional or psychological conflict. 3. Diagnosing the root cause. To fix discipline, you must find out why you're breaking it. Ask yourself, what emotion am I feeling when I break my rules? What thoughts justify the action? Is there a deeper belief, e.g., I need to make money today, or losing means I'm a failure? Your journal is your best tool here. Track the mental and emotional state around every disciplined or undisciplined action. 4. How to build real discipline. Tendler outlines a step-by-step process. 1. Map your mistakes. Track exactly when and how you break discipline. What were you feeling, thinking, doing?
2. Inject logic.
Create specific statements to counteract your emotions in the moment. Example, breaking my rules may feel good now, but it destroys my long-term results. 3. Train with intention. Practice discipline like a muscle. Repetition is key. Visualize sticking to your plan before the trading day begins. 4. Build better habits. Discipline becomes automatic when your habits and environment support it. Create routines that reduce friction and prevent impulsive behavior. 5. Strengthen emotional control. Use tools from earlier chapters, breathing, journaling, pausing before acting, to reduce the emotional charge. 5. Discipline is mental muscle. The more you use it, the stronger it gets. The more you break it, the easier it becomes to keep breaking. Key takeaways. Discipline is not just about willpower. It's a mental skill that must be trained and protected. Emotional impulses, fear, greed, tilt, are often the real cause of broken discipline. Track your mental and emotional state to uncover what's really going on when you break rules. Use logic, repetition, routines, and intentional practice to harden your discipline. Chapter 9. Correct your problem. A systematic approach to fixing your mental game leaks for good. After identifying the root causes of your trading issues, whether it's fear, greed, overconfidence, tilt, or hesitation, this chapter shows you how to correct those problems permanently by using Tendler's mental hand history process and reinforcing logical thinking over emotional reactions. Key concepts. 1. Awareness isn't enough. You must rewire it. It's not enough to just understand why you make a mistake. Real change happens only when you replace the faulty belief or emotional reaction with a stronger, more logical response. This takes repetition, intention, and review. 2. Mental hand history, your core tool for correction. The mental hand history is like a trade review, but for your mind.
Steps.
1. Describe the problem clearly. X. I chased a trade and over-leveraged. 2. Identify the emotional trigger. What emotion did you feel? Revenge, greed, etc. 3. Find the underlying belief. Ask, what did I believe at that moment? X. If I miss this trade, I'll never get another chance.
4. Inject logic.
What is the truth that contradicts the belief? X. Opportunities are endless. Missing one trade won't hurt my long-term edge. 5. Visualize the correction. Replay the moment mentally with the correct thoughts and emotions. This reinforces the new belief and helps rewire your reaction. 3. Injecting logic in the heat of the moment. Tendler emphasizes using pre-written logical statements to stop emotional spirals as they're happening.
Examples.
This trade setup doesn't care how I feel. Follow the plan. Missing one trade is better than forcing a bad one. A loss doesn't mean I'm a failure. It's part of the game. These logical reminders help bridge the gap between emotional impulse and disciplined action. 4. Correction is a cycle. Rewiring your mental game isn't instant. It takes awareness, noticing the mistake as it happens.
Analysis. Identifying the real cause afterward.
Repetition, replacing it with the correct response consistently. Track progress in your journal and recognize signs of improvement, even if they're small at first. 5. Be patient but persistent. Change takes time, especially if the problem is rooted in years of thinking a certain way. Don't expect perfection overnight, but with every mental correction, you build strength and resilience. Key takeaways. To fix your trading problems, you need more than awareness. You need to correct the faulty emotional and mental patterns behind them. The mental hand history helps you analyze and reprogram how you react to challenges. Injecting logic is how you fight emotional bias and bring your trading back under control. Progress happens through consistent review, practice, and reinforcement. Chapter 10, Troubleshooting a lack of progress. What to do when you're stuck or not improving, even after all the work. This final chapter is a reality check and a guidepost. Even after applying the tools and concepts from the book, like mapping problems, injecting logic, and working on discipline, many traders still hit a wall. This chapter helps you identify why you're not progressing and what to do about it. Key concepts. 1. The most common reasons for lack of progress. Jared outlines the most frequent culprits when a trader isn't improving. Lack of repetition. You haven't worked on the problem enough. Weak injection logic. Your logical counterpoints aren't strong or specific enough. Inconsistent journaling. Without tracking, you can't measure or improve. Overlooking deeper issues. Sometimes surface-level problems are symptoms of deeper beliefs. Too many issues at once. Trying to fix everything at once spreads your focus too thin. 2. Use the mental game map. If you're stuck, go back to the mental game map. Identify the pattern. Trace the emotion. Pinpoint the belief. Challenge it with logic. Reinforce the correction. Don't just guess, diagnose. 3. Evaluate your injection logic. If your logic isn't working in the heat of the moment, it's likely not specific enough, not emotionally resonant, not repeated frequently. Make it stronger by making it personal, using strong emotional language, writing it down and reading it before after trades. 4. Improve your practice routine. Mental game work is like going to the gym. Tendler suggests reviewing injection logic before each trading day, journaling and reviewing problem spots after trading, tracking wins, not just money, but mental game wins. Example, I felt FOMO, but I waited for confirmation. That's a win. 5. Don't confuse market mastery with mental mastery. Sometimes you're progressing mentally, but market conditions are changing. Don't assume a plateau in performance is always mental. Evaluate both sides. Ask, is my edge still valid? Am I executing well, but not getting results due to market phase? Am I adjusting strategies for different environments? Key takeaways. Progress plateaus are normal. Troubleshooting reveals whether it's mental, strategic, or emotional. Repetition and strong logic are critical to lasting change. Track your mental game wins, not just P&L. Use your journal to find out exactly where you're stuck. Growth is non-linear. Stay committed. Final thoughts. The mental game of trading is not a quick fix. It's a system to develop mastery over your thoughts, emotions, and behaviors in the market. Mastering the mental game is a lifelong process, but it's the ultimate edge. Thanks for watching today's summary of The Mental Game of Trading by Jared Tendler. If this helped you gain a new perspective on mastering your mindset and improving your trading, make sure to like this video, subscribe to PowerBooks, share it with your fellow traders, and hit that notification bell so you never miss powerful insights like this. And if you want to dive deeper and get the full experience, check out the link in the description below to grab your copy of the full book. Until next time, keep leveling up your mind and your money.